In the currency quadrant today, taking a look at the March British pound futures, which did have a positive day, up almost 1/3 on settlement today versus yesterday's close of 132.09. To the downside, less than 0.2% lower than yesterday's settlement. 131.87 was that low print in that March British pound, but to the upside, 132.75 was up about 0.5%. So we did finish closer to the highs than to the lows, and we're now up 2 days in a row, but it's only been up, and I mean the price of the British pound, on a weekly basis twice in the last 7 weeks. So that downtrend is clearly still in place. And a lot of that downtrend was based on the potential for a Bank of England rate hike. And some of the data may have taken that a little off the table. UK GDP and construction output both lower than expected. That GDP was a little bit older data. It was a revision of the Q3 quarter over quarter and month over month data, not as highly regarded, but that construction output was lower. Could have been the effect of the expectations and consumer confidence data, which was not strong in the UK in their most recent iteration. But we do have a Bank of England meeting next week. Now, the last Bank of England rate decision was sort of a mixed bag. It was a mixed vote. It was a little bit more toward leaving rates unchanged and leaving asset purchases where they were than the market thought. It was leaning heavier toward that. But sterling is set to react to the voting pattern again after 2 out of 9 members dissented last time. As I mentioned, the expectations were for more than that. They opted to hike borrowing costs. One of those members has actually said recently that he might reverse that leaning towards hiking or leaning towards slowing down or reducing asset purchases. So watch for that Bank of England meeting next week if you're a British pound trader.